Tieti, you are welcome to this conversation. Colleagues in the cooperative bank movement, this is one of our first conversation as global change investors, and we thought it's an opportunity as technology allows us now during this lockdown to use it and reach out to everyone, because cooperative enterprises have managed to withstand challenges of the 1997 Asian financial crisis the same way it happened in 2008. Cooperative enterprises were able to withstand the global financial meltdown. Even now, as the whole world is facing the COVID-19 pandemic, I think all of us, we can agree that those that have confidence in collective actions through the cooperative enterprises, they will be able to find their way through. Hence, as global change investors, we opted to host this conversation under the theme that says we'll start up cooperative banking initiatives, be able to go through the COVID-19 economic landscape. And we had two guests for today that will speak one after the other. And we'll have our first speaker, Tsietsi Ngobese. He's an actuarial scientist, and he will be reflecting on the thoughts and what is it that from an actuarial scientist point of view, as far as cooperative enterprises are concerned, what will it take for us as cooperative banking initiative and many others in South Africa and across the whole world for them to survive even this pandemic as they did the 2008 and 1997, the Asian financial challenges. And one of the things that I think we will need to agree prior to me giving him an opportunity to present and talk to us will be an opportunity to set some ground rules for everyone, that when you speak, Zoom allows you to raise a hand so that we are able to recognize you, because there will be an opportunity to ask questions. Secondly, let's raise questions that seeks to help all of us understand how we need to take the cooperative movement forward, because it's through collective actions that together we can defeat COVID-19, that together the cooperative enterprises, including cooperative banking initiatives, can then take the lead in helping our people, South Africa, the continent of Africa, and the whole world to be able to withstand the challenges, particularly the economic side, where many are not sure of their employment opportunities after the lockdown. We are all muting all our microphones as we allow our first presenter, Tsietsi Ngobese, to come on board and just talk to us under the same topic. Thank you. Over to you, Tsietsi. Tsietsi? Tsietsi, can you hear me?
Good day. Yes, I can hear you.
Thank
Am I still audible enough?
Yes.
Yes. Thank you very much for the opportunity. When we look at one of these pandemic, what it has taught us, if you go back, I'll just give a little brief of a story, how the insurance and the financial sector was formed in England through the Lloyds when the ship merchandise would have their ships lost. And now what they did, they took a collective approach to form what today we call cooperatives, but they form it in the form of a group they call syndicates, where they would come together and put in resources that should the ship that goes out into sea and get the goods and the commodities that the sailors will be getting into other countries, should it not come back, they will be able to pay the families of the people who are responsible for that ship and also be able to still continue to import. So that philosophy has become what formed what today we call the birth of the actual profession, the birth of the insurance sector, and we still have those syndicates still operating today, which are called the Lloyds. They come from that coffee shop that was established in the 1900s. So now the reason for that whole setup, it came from a concern that collectively, what can we do to assist each other reach common goals and common understanding? So also it comes back to the risk mitigation factor. So if you look at the insurance space, fundamentally where we would collectively collect premiums and say, if we just take general insurance or what we call short-term insurance, where we would have 100,000 policyholders, each paying a premium of around 300. And then you look at the risk of how many are most likely to claim. But because we know that there's a possibility not all of them would claim at the same time, it increases the opportunity for the business to remain profitable going forward. So now with that kind of model is what is also working to banks, right? It's also the same concept. Very, very simple. So now if every one of us was to go to the bank and withdraw our money now, they would have what they call the bank run, where the bank doesn't have any money left for them to pay out to their clients because the money of the bank that came together is given to other members. They make profit out of it. So it cannot do that whole value chain circulation in that regard. So now, even though they do it in a more sophisticated but simple approach, which is more of your business approach, but it's the same concept as your cooperative, is the same concept as what you call stokvels, grocery stokvels, umshayelwano, depending what term that we use, and it's been a principle that we've been using for over many years. So my mom was part of a stokvel which started their contribution in 1995. So
Well,
from
in
that
fact, I want to study physical cosmology, even if it's not my main field of cosmology is
getting noise feedback, is it possible for everyone to mute their mics? Thank you very much. So when we did the math and we look at the possibility of my mom Stockfell, so they've been doing these contributions every year since 1995. Now with an average of 200 a month, currently now is around 300 a month. So they will collectively group the money, and then at the end of the year, where they go buy groceries, depending on what was the agreement to the subsequent following year, and then you look at a bank more like ABSA. Now, they're more relatively the same concept, but now ABSA is over a 4 trillion rand business, but my mom's Stockfell is still zero valuation because all the capital that they use, all the capital that they save, they will use it up every year. And then obviously having new members coming in and out. But the original members for the past 26 years, they didn't acquire any asset, they didn't fund any business model to be sustainable in that regard. So that doesn't mean what the financial sector is doing they cannot do, but was that their approach was not in that long-term view. Probably at that time, 26 years looked like a very long time, but they're already 26 years in it already, but they don't have any fixed asset income generating model that they could use to sustain sustain their stock fails or even acquire other businesses in that regard. So now that principle of long term usually looked relatively small in the short run, but in the long term, you start to realize that 20 years, 10 years is nothing much of just another day, but depending on these collective actions that we will be able to do now, preparing for the future. So now you would have mitigated the risk and ask some of the questions, what if? What if X happens? What if you have a disaster coming in, whether it's geopolitical or natural disaster, your wars? Now the coronavirus came in as one of those systematic risks which you cannot automatically avoid. Now, when it came in, no one saw it coming. Unfortunately, with all these risks, no one sees it coming. You have an earthquake tomorrow, you could have thunderstorms, whatever those that need to be priced in whatever price action that you'll be looking at. So now, in that regard, what that whole concept does, it always says we need to prepare for tomorrow. As much as no one saw COVID-19 coming, but we are in it now. So now most of people who didn't prepare for the rainy days, so it's like they're busy trying to fix the roof while there's a storm. So now it becomes quite of a challenge. So now we didn't have that perspective to have that long-term view on how do we mitigate some of these risks. Because now the concept of cooperative banking, the concept of financial sector, the concept of insurance, all these financial instruments is to say, should anything happen to me or anything happen that is beyond my control, I should be in the same financial position as if nothing happened. Now, that's basically the same concept of insurance. If your car breaks now, you should be able to fix it as if your car didn't break, because now you have made allowance for it to be in that space. Now, when we look at all these business models, what they have managed to do, even though they had the ability to collect what you call premiums or huge funds from different individuals, and then able to have a huge buying capacity to dictate the market. So now, one of the groundbreaking discoveries that has given cooperative and financial institutions throughout the years was the ability to dictate the market and ensure that they remain sustainable. I'll give you a practical example. If you have a car insurance with insurance X, should your car break, you can only go to the dealer X, where they will be able to process your claim. If you go to any other
Hello.
because of that, you are forced to use these service providers, you don't have a choice. In that regard, they have built their own business. Now they are sustainable, so they don't competition. That could be your fuel pump, it would cost you 300 in the street, but when you go to the approved dealer, they will.
Tietty, we are missing you. Is it the network or what is happening?
Hello?
Colleagues, we seems to
Hello?
be.
Am I back?
Yes, you are back now. I think you can continue. Just repeat from when you were trying to give an example of the dealer, because I think that's where we missed the whole scenario that you wanted to paint.
Yes. So now in that space, then it means Yes, can I'm a bit clear now, or am I still
Yes,
audible? Yes.
you're
So
audible.
now, thank you very much. So now, what it means if they can dictate which dealer you can use with supplier, irrespective of the economic environment, they're still sustainable and profitable. They take care of their own members, right? So now, in that regard, they started it very difficult for outsiders to play within their space. But because they have the pool of the capital on their side, it makes sense for a person who's just only paying that small premium to go wherever they have been, to what they call the approved mechanic or approved dealer or approved service provider. Then it makes sense for for their clients to use that service. So in that chain, then they become that whole part of the value chain. So now the process, they know how much it costs for the parts and all that whole kind of scenario and value chain needed to ensure that their client cars are serviced. And then now, should any of their approved dealers not deliver, they are able to follow up and replace them or put any other of those agreements. So now that on its own is called a cooperative because they are cooperating in that regard. So when we are able to cooperate in that regard, then it provides unlimited possibilities. It not only stop
We cannot hear you now. I think the network is starting to interfere with the presentation.
hello, better now?
Yes. Yes, we can hear you. You can continue. Can you hear us? Hello, Tietzi? Can you hear me? We colleagues, we seem to be having a network problem with one of our presenters.
They most likely support those businesses unaware. So now, with that regard, they are able to do what we call building a philosophical business. So now, the concept of building a philosophical business is not really a product, but is more of responding to philosophy or answering questions in terms of when you're building this philosophical business, you will be able to have a broader control in that whole.
The network is back on our space. Tietzi, I think the network is, I'm not sure if it has pushed him out. We should be, I think for now he's out. Yep, this is a challenge that COVID-19 has brought to all of us as we speak now, as we are connecting to make sure that we set up the best environment for ourselves. It also presents an opportunity for those that are in the network space to be able to find a niche and present what is it that can be done and how far we can be able to go. I think as we try to reconnect, what is it? As we try to reconnect CETI, I think we can just establish, I think Yamkela is also here with us.
I'm here already.
Yes. I think Yamkela will also be able to talk to us on what COVID-19 present to cooperative enterprises, particularly as far as the economic challenges are concerned, and the extent to which they will affect us as cooperative enterprises. Over to you, Yamke.
Greetings. Let me also take on where Tietzi has left off, but approach it from an economic perspective of what COVID-19 has brought and what it will bring. We by now know that we are dealing with a global pandemic where many countries in the world have gone on lockdown and the global economy has slowed down, supply chains and everything have had to slow down as a result of this pandemic. But what is now following this pandemic is that there's an economic crisis that is pending because of the slowing down of the global economic system and other challenges that were already part of what was happening in the global economic value chain have now led to what we predict to be the worst financial crisis since the Great Depression in the late 1920s and 1930s. That's what institutions such as the IMF, the World Bank, and other institutions like Boston Consulting Group and other institutions that also deal with economic matters have come out and said that according to their analysis, they foresee that this post-COVID-19 economic downfall will be one of the worst in history. And in fact, it will take us to depressions that are as low as what happened during the Great Depression. Now, we've seen economic crises before. I think earlier on, Eldando referred to the 2008 global financial economic crisis and the 1998-1997 Asian downturn of the markets that affected mostly Asian countries. But what this is unique is that it's not just the markets collapsing, but it's coupled by a global pandemic that's going to change how we do healthcare, how we do working. Many times the issue of people working from home, working remotely, interacting with people without having to be at the office was a story that was not something we were thinking would happen now. We were always hearing 4IR, but we're thinking it's something that we are going to gradually be phased into. What COVID-19 has done is that it has brought an element of saying, since we cannot go and interact with one another, we have to accelerate the idea of what is a fourth industrial revolution. Ordinarily, this financial institution would have had its meetings at the Midrand fire station. And for the foreseeable future, we would have face-to-face meetings when we have such events, and then maybe broadcast from there. But what COVID-19 has done is that it has forced the idea that even annual general meetings and other meetings of this financial services group will be forced to take place on platforms such as Zoom. So it is definitely something that we need to take cognizance of. Let me quickly switch off this interference.
As he's switching off the interferences.
Okay. That is done. Thank you so much. It was just an incoming call from another application. What I am trying to portray is that we need to understand that the new normal is going to change how we interact with technology, but also it's going to change financial services. How is it going to change financial services? We've already seen that many people, because of being laid off work or not being paid as a result of the crisis, are now having to go to banks and say we need payment holidays, we need some form of insurance for the bank to cover our debts and our assets while we are not able to have earning power and other things that are now bringing people to the realization that banks are saying that we can only protect you for 3 months or for 6 months, and after that we expect you to pay, or other such arrangements. So what it has brought again is that we need community-based financial services and financial institutions. This means that financial services that are related to us, not monolithic buildings that we go to and there's no personal relation. And the idea of cooperative banking really comes from a concept, as TT was speaking earlier, of what stokvels are. People came together and said, we all have mutual needs. We have needs to cover ourselves in clothes. We have needs to feed ourselves. We have needs for housing. We have needs for cars and whatever else we use for money for, or our finances for. And the realization was that we needed a strategic way where we could come together and use our collective buying power. Because I, as Yamkela, Elder Brian, and whoever else in their own singular power cannot be able to achieve certain things. But if we collect and club together our financial power, then we are able to achieve certain things much shorter. And what this crisis is now bringing us to is how can we start using this power to protect ourselves as people when we are faced with financial crisis, because this is not the last financial crisis. What happens in 20 years down the line, in 10 years down the line, when you are faced with a situation where the globe cannot have economic services taking place, and it forces us to then go back and say to our financial institutions, we cannot afford to pay premiums and so forth. Will your financial institution listen to you if it's just a normal bank, a commercial bank? Or will, if your financial institution is the same people that you break bread with, that you go to church with, that you socialize with, they are more likely to be sympathetic to what you are doing. And you are more likely to have common vision about what you want to achieve as a collective. And we need to then understand the importance of financial or cooperative financial institutions and cooperative banking from that angle, to say it's a stokvel that is very sophisticated, in that we have now realized that it does not serve us when we save money for 1 year and at the end of the year we spend it on grocery or we spend it on whatever, and then the next year we start from scratch again. It serves us better when we have long-term goals, to say we are not only going to be creating wealth for this generation, we are going to have a long-term view to say we can use our collective savings over a long period of time to amass assets that are going to help us to create wealth for our people in the generations to come. And classical examples of this are the likes of how the Afrikaners, when they started with their systems, their banking systems in the 1920s, when they established their systems, they were like, we want to empower Afrikaners down the line. So we are going to use our collective power as Afrikaners to be able to club together the money and create industries that we are going to invest in, so that Afrikaners can be able to compete with the English. Because we must remember that after the Afrikaners were conquered in the Anglo-Boer War, they were poor, they had nothing, they had no industries, they had to go work for the English people and the Jewish people who owned the mines and other resources that they had taken from the Afrikaners. So they said, now we are going to use our clubbing of financial resources and create industries in which we can invest in and be able to create wealth for future generations. And in this collapse of the economy again, it means that we are at a space where people are able to review their financial spaces and say, having a bank account with Standard Bank has not worked for me, because here I am, I've been putting money in this bank account, but when or I've been paying loyally my bond to Standard Bank, but here I am when I'm in need, Standard Bank does not pay attention to me. How do I then empower myself and my kids after me, because they will also need the same assets that I have today. They will also need housing, they will also need cars, they will also need whatever is relevant for that time. How do I empower them to not have to suffer the same way that I have suffered, by creating financial resources that enable them to be able to avoid a scenario where they have to consult a bank with no mess? And financial institutions such as CFIs and such as cooperative banks are critical, because they are based on communities, they are based on trust. Those are the two things. They are based on communities and they are based on trust. Trust is something that is central to any financial services that people go into. So we come as a collective and we trust ourselves that we are going to come in here, and instead of just using our collective financial power for things like groceries at the end of the year or paying school fees only, we are going to use our collective power to invest in tangible assets, to invest in tangible industries. We are going to take the small money that each of us can contribute. But when there's 1,000 of us contributing 1,000 rand, now we have 1,000,000 rand, and we are able to invest in an emerging company, for instance, like Zoom. Zoom was a small company a few years ago that started, and a few investors invested in the early stage. Most of them invested $1 million, $2 million. They are now billionaires because the stock of Zoom found an opportunity in this crisis to grow exponentially. They had not pre-planned that there was going to be a financial crisis, but there are people in the world who had never heard of Zoom. Even my mother and father had never heard of Zoom before March 2020. They are now users of Zoom because of the financial crisis that has happened. And this has increased the stock value of Zoom. And the founders who invested are now billionaires from the millions that they invested. Now, imagine if those initial investors were just people who grouped together, like the Global Financial Change Institution, and they put their money together and invested R1,000,000 in Zoom. That R1,000,000 that they collectively invested has grown 500-fold. So now it's now 500 million. That means each of these 1,000 rands are now 500,000. You put in 1,000 rand, and in the space of 4 years or 5 years since Zoom stock started to grow, you now have, from your 1,000 rand investment, 500,000. It's the kind of thinking that says now we are able to take, no matter how small we think our investment or our money is, we are able to make impactful investments that grow our capital, but also grow our capability. Because if a stokvel can own shares in Zoom and Zoom grows, it means that that stokvel can take that money and also buy shares in Sasol. Now, Sasol had an occurrence because of the oil crisis in the last few months, where their stock tanked from around 200-300 rand per share to as low as 20 rand a share at some point. And people who invested, we are now beginning to see that the stock of Sasol is beginning to recover. And Sasol is something, for instance, we all use petrol in one way or the other. The stock fell, can come and say, we are purchasing Sasol shares. We are purchasing 1,000,000 Sasol shares. And we hope that in the next 5 years, these shares that we purchase at 20 rand will be worth 200 rand a share or 300 rand a share. Sasol stock has been at that value before. Now we are able to have perspective of saying, in the long term, we are able to make money not by saving and buying groceries at the end of the year, but by having a long-term perspective of investment, and therefore creating a situation or a scenario where we are self-sustaining in our financial etiquette, in our means of using our small money together to create a big financial muscle for our communities. And that's the whole perspective of cooperative banking in how it is used in other parts of the world, where you find in countries like the Netherlands and in Europe, in Italy, cooperative banks are able to own a lot of things through investments. You find cooperative banks are sometimes owning more assets than certain commercial banks because they are using their structure as a way of owning investments and then using this money to then in turn go back to the community. Because now, if we have invested in Zoom, hypothetically, and our 1 million rand is now 500 million. We are now able to lend you the same financial services that your bank, your ordinary bank was lending you at a far cheaper rate because you are a member. When you come and say, hey, I have identified a house, may you please give me a bond so that I can purchase this property. Now, a bank would normally say, okay, let's look at your credit record. It looks like you have a bad credit history and we don't actually know you too well to trust you. So we are going to charge you prime plus 5. Prime is around 8% now that the Reserve Bank has dropped its repo rate. So your interest is going to be around 13%. But your cooperative bank can say, no, we don't even have to charge interest. You will just pay against inflation to keep the value of the money the same as it is year on year. Or any other financial services that they can provide you. They can provide you with insurance. They can provide you with financial services that are tailored to your needs at a far cheaper rate because now you are a shareholder. You are coming to this bank as a shareholder and saying, look, I have this crisis. As a shareholder, can you then assist me to solve my own financial crisis? And in turn, the cooperative will be an asset holder in my asset until such time I pay the cooperative back. But I'm also paying myself back because the money that I've invested is also earning interest. And I'm so, in any case, if I borrow from the cooperative, I pay myself back. And I'm borrowing from myself to make myself grow as a shareholder of this cooperative. And it's ways that we approach this model of banking that can assist us in the long run to be able to say we are financially free as a people, as communities, as Black people, because these are things that we have not done that other races have done very well for themselves, and at the end of the day have had better economic standing and have been able to do things that are much better where their communities stand as opposed to us as Black people, including building better schools, healthcare facilities, and other things as communities, as opposed to depending on institutions like the government. And we don't have to look very far, like I alluded earlier, that we just need to look at how the Afrikaner community has built strong resources around them to be able to control a huge chunk of the economy in just a space of 100 years from when the Afrikaner Bond was formed in 1918. And if we have that same vision, we can use our community initiatives and community banking initiatives to change our economic standing.
Sorry, there was just someone who joined and the microphone was on. We have muted them. I think, Kela, we can use possibly the next 10 minutes in rounding up and just then allow the people to ask questions. TAT is trying to resolve the challenges of network, but those that have got questions in the process, when we'll be addressing the questions, you will also be able to come in and either expand on the issues that he had raised earlier on and begin to also answer some of the questions from a financial risk point of view.
Yes.
Over to you, Yamke.
Yes, we definitely can take questions, and I believe Mr. Ngobese is also back online, so we can take questions. And if they are directed to him, he can also be able to take the questions, and we can help with a better understanding of what we are trying to achieve when we use cooperative banking as a means to liberate ourselves from financial poverty or from financial suffering that we have seen that a lot of our people suffer from, and we can use our collective resources as a tool to bring about the change that we are looking for. So I will appreciate the question.
Thank you. I was not saying you need to round up now. I was saying if it's possible, we can make your input in the next 5-10 minutes, because we had a hope that we will open for questions at 4 o'clock.
Okay. Oh, I still have time. Wonderful. I thought that we are looking to use the next 10 minutes for questions. No, it's not a problem at all. I want us to also think, because I believe predominantly in this institution we are Christians. There's an element that I
not
did
all
not
of
bring.
us are Christians. Not
Yes.
all of us are Christians. There are Christians that are not Christians.
No, I'm saying predominant.
Oh, sorry.
And if you are not a Christian, please just write a comment. Make me aware. I will not be offending any other religious groups, but I just want to bring a certain perspective as well, to say that churches as groupings also have a lot of financial power that they have not used. Churches are bodies that are registered. Usually you register a church as a non-profit organization. And it's what in law we call a juristic person. So a church is a juristic person. That means if you've registered it as an association of people under social development, or registered it under the CIPC or as a trust, it's a juristic person. It can sue on his behalf. It can enter contract on its own. It can do things that a normal person can do as an entity, what we call a juristic person in law. And in churches, there's also value that we have yet to derive to be able to influence the economy. When you look at the Islamic faith, the Jewish faith, and how they have treated financial services as an integral part of their faith, you realize that Christians and churches still have a lot to learn. For instance, there's something called Islamic banking, where, because like Christians, Muslims are not meant to charge interest or have interest in their financial dealings. It's actually biblical that you not charge your brother interest when you lend your brother. But we are in a financial system that forces us to pay and charge interest. Islamic banking uses a different financial system where they avoid charging interest. So they rent. So when a Muslim uses Islamic banking in ABSA or in FNB or in a financial institution, the arrangement is different from how you buy a car. They rent that car. So they don't pay interest on it. They rent it until such a time that the rent matches the value of the car, and then it's handed over to them. Small things like that means that on average, the Islamic community can come together, and they're able to influence how the banking sector deals with them as a community, and they derive value from that. The Jewish people are known for their financial prowess as well, and how they've used their collective community as Jewish people to be able to amass a lot of wealth throughout the world. In whatever country you go to, you will likely find Jews owning industry, owning this, and generally being well off than many communities that are found in those parts of the world, including the banking and financial sector, where they dominate a lot of the major global financial institutions as ethnic groups or as an ethnic group. So how do we then position ourselves using the institutions that we find within our community? 9 out of 10 times you will find a church in a Black community. How do we use these institutions to say, they can also make long-term investments that bear fruit, that help the community, not only spiritually, but financially, in education, in healthcare, and other key facets of community needs. And it's an important factor that we need to start saying we need to assess how we deal with our finances as Black people, as communities in South Africa generally, so that we can be able to use communities to be able to make impactful financial decisions on the ordinary day. On the ordinary day that there's a church service, what portion of that money goes to long-term investment that can make returns for the church and its members, and also make returns for the community in which the church is situated in, because a mission of a church in a community is to be a place of refuge and a place of healing and a place of solutions in that church. I don't think a church envisions itself as a burden to a community. It envisions itself as a place where the solutions emanate from. So how then do we look at using these institutions that are in our communities to be able to impactfully change the structure of communities that we find these churches in? Because we know that communities in the townships are mostly embroiled in poverty, are embroiled in poor schooling infrastructure, in poor healthcare infrastructure. And we will see now, as COVID-19 cases seep into the communities, how different it is between the have-nots and the have, or the rich communities where they have all the things in place. How different things will be in the clinics where people have to line up by their high numbers using a small facility. And how do we begin to imagine our future as communities different and be able to infer the small, what we consider small, when we start thinking of it in a bigger scale, in a scale of 10,000 members, in a scale of 20,000 members, in a scale of 100,000 members, then we realize that 100 Rand or 1,000 Rand, when it's coming from 100,000 people and it's making investments that are meaningful, starts becoming not small money, but money that can create impactful and massive change altogether. And that's where I think, because it's almost 4 minutes to 4, I'll give Tietzi to counter his or finish up, because I see he's back, and then we can be able to start taking questions from 4 o'clock, so that he can also finish his points as well.
Tietzi.
Thank you very much. Can you hear me?
Tietzi. I think you can speak. Let's see. I think your microphone is on and your video is on. And if the video is the one that's creating a challenge, possibly you could just switch off the video and come through only audio.
Hello?
Yes.
Am I audible?
Yes, you are audible.
Okay. The whole concept of the cooperative is a numbers game. Any financial institution or any community is more of a numbers game. How do we come together and assist each other? So now what I've done here, I've just shown a bit of what the possibility of what can be. So we assume you have 300 members, each contributing 500 a month, and then you will have yearly, you will have a total of 1 million worth of savings. that's 10 million, and then in 30 years, that's 32 million. That's only what savings where you haven't included interest and allowing for inflation.
In the mighty name of Jesus Christ, Father God, all the less.
Hello? Yes? Am I still audible?
You can continue. I think someone connected through someone. Yes.
Yes.
I think you can
So,
continue.
So now when you look at numbers, so now if you have 1,000 members, so the numbers drastically increase. So it means you have a capability of $1 million a year. If you have so you're able to build your own shopping malls, income generation assets, whichever business that will guarantee cash flow, whether it be a food retailer or your petrol. So you obviously look at your less risky assets. So includes your property, your food, those guaranteed business irrespective of the conditions. And then you also look at your shopping malls, whichever that the members will find of the suitable institution. And then if you go to 10,000 members, now you on a yearly basis, now you can have a saving of 36 million per year, and that's an average of 3 million a month. That's only with a minimum contribution of 500 per month. So depending on what the members would be able to contribute going forward. So now you have the same financial muscles. In 30 years, you have over $1 billion, but with the right income generating assets that can be invested in, is most likely that within a period of less than 5 years, the members could have an opportunity to stop because the income that can be generated or that be generated by assets and discount back the money that they would have paid in for the next 5 years or 10 years. So basically is what you would call a paid up policy type of a thing. So now in that rate, then it releases pressure from the members, but knowing that acquiring these different assets that give them that huge flexibility in that space. 10,000 might look as a big number, but it's relatively quite a small number, depending on the strategy and how they, in terms of how do they relate to the community, part of how their integrated approach speaks to the members, because you need to understand that the of might differ. The members understand that long investment, then it becomes quite a huge investment saving vehicle. Is such amount of money, we are able to acquire as many possible income assets, and then with 100,000 members, now you're sitting at 160 million a month. We haven't included any interest. It's just pure capital in that kind of savings. So with only per annum, you are having an ability to save 360 million. Now, in that case, it means you can build your own healthcare systems, your own education systems that you can finance and still benefit. These numbers, this is what your banks or insurance companies are already having as premiums. So now if you take these as premiums, could be your Sanlam funeral cover, I believe they have more than 100,000 policy holders. So it means they're collecting an average of 360 million per year. In 5 years, that becomes 1.8 billion, 3.6 billion in 10 years. Now you could see the massive impact that can be done. Then with that kind of investment, being able to support the members, and then if the member grows to 1 million, then when you look at the numbers increase. So it is a numbers game, and also look at how is it possible that you can have a 3.6 billion collection model from us and build all these sustainable institutions that we will be able to hopefully end that whole plight of poverty and have a voice. These industries, institutions that will be, whether acquiring in terms of buying shares, whether listed or non-listed, or investing in the members' business and having that whole structure. But the good thing is that the whole model as the members, it carries on the members' terms, how the members want their money to be invested and grown, could in the agriculture space, set the that you enter into, but there is in that huge collectiveness, but then you could see in numbers, it is a numbers game, and you could have such. So it means shopping mall, the next should be built by us, and we cannot be on the sideline or waiting for others to come do it for us. So to have that togetherness in terms of being able to have impact in our own communities. So it is the way it was already being done. I think the I'm not sure, but they were registering, they're opening over 200,000 accounts per month. It means their collective savings of the membership of your monthly charges, it's above billions monthly. So there's nothing special that FNB is doing. Special that Upside, there's nothing special that Tech is doing, or whichever reputable and respectable financial institutions that they're doing. We all can do it. And the good thing is that we've been doing it. The challenge was the business model. Because if you were to combine the collective savings of the stock firms across the country, it's more than this. It is a sleeping giant. So it means we need to have a long-term view. It can no longer be that we continue to save up December and then struggle the following year. So now it's about how do we sustain our own communities and establish our very investment hub, own cities the way we. So everything is possible. We just have to move in that direction and believe that we can and leave a legacy for the next coming generation to we would have prepared a foundation for them and they don't have to start from scratch. Thank you very much.
Thank you, Tieti, and thank you, Yamkela. I think we will. Let's see how best we can manage this one, particularly because we need to be receiving some questions, and the best way to get the questions will be. I'm trying to get a hold of this space. If you choose to ask a question and you hear someone raising a hand, I'm going to unmute all the microphones now. I'm trying to check if I will be able to see your hand because Zoom allows us to be able to see the hand raised in terms of questions. Those that have got questions, we can open up the space now, and there is one hand that has been raised. Mwaku, you can be able to raise your question now, and you can unmute your own microphone and then raise your question. Mwaku, are you there?
Okay, sorry, I was speaking on mute.
Thank you.
Yeah, actually, yeah. So thanks for the insightful presentation and this insightful knowledge that we have received here. I think from my side perspective, it's not really a question, but it's also a contribution. I don't know if you allow me as well.
Yes, you can do that.
Yeah, because I was looking at everything that is currently happening with the COVID-19 pandemic and how most sectors are really not sustainable and are getting a hit from this, especially the property business. As one of the speakers was mentioning, that a lot of companies, a lot of businesses are now adapting to this standard of working from home. And if you look at it, what we have seen with most companies where people are working from home, they get to save a lot in terms of the maintenance of those buildings, the rates and all of those taxes that they will be paying for those buildings. So it really makes a question like, what will happen in future for those high-rising buildings that we are seeing today, where most of the companies like Group 5, WHO, it was like their bread and butter to build those facilities. But now COVID-19 is now shaping that market into another area. So, which is really something that maybe one may start to think in terms of which will be the sustainable businesses in the future. And I see now, I've read in the past weeks that ShopRite and Pick n Pay, they're also looking at the township economy market. They want to start building spaza shop. So I'd like to pose a question, maybe something to think about, that as a cooperative, what do we think of that approach that ShopRite is taking and now coming into the township where we are and where we like to specialize? What is it that we can do to counter this monopoly of ShopRite and on those big retailers? But as a cooperative, I think maybe something that we can look at to compete in that space. Because currently what is happening, most things that are happening now, food retailers are making a lot of money currently in this situation. So maybe we need to look at those kind of businesses that are sustainable. Yeah, that's one of my contribution that I have for now. Still have some, but yeah.
Thank you. You know, sometimes it's good to be the first one because you then set the tone for how the rest of others will be able to be managed. I think to be able to enable both CAT and Yamkela to answer some of these questions, can we then have possibly questions without comments in sets of 3? And then you can be able to direct each one to say, is this one going to Tsietsingores or to Yamkela Spengane? So that we are able to address questions first. Then possibly, because we were scheduled to finish at 4:30, once the questions are dealt with, then we can open up for people to make some comments. Is there someone who is raising a hand as we give Yamke and Tsietsi to answer Mwaku's question? And others who want to also ask questions, you can also use the chat group to ask your question in case you do not want us to say who is who, but we'll be able to say there is a question from the participants. And then it's then addressed, or you can address directly to one of our panelists. Tsietsi, you can start, or Yamke.
It's fine. Let me just quickly cover that, and Tsietsi will also answer from his perspective as well. So in terms of property, definitely the idea of telecommuting is going to change how people actually approach the matter of business and business property in terms of office space for companies and so forth. A lot of the major companies are also allowing employees to work from home. Some of them say, those who want to work from home can permanently work from home. But we also do know that for some people, working at home is not sustainable. You can't get much done with the kids here. They are crying. They want this because it will take some time to acclimatize to that. But what we know for sure about property is that living space, not office space, but residential property is something that is not going to go away in the near term. It's something that you cannot wish away because people will always need shelter. So if you are looking at property, you definitely want to look at how you can make an impactful contribution in shelter, because these office spaces in any case are monopolized. You will realize that it's big property companies that are listed that also they use the Stockfell model because people buy into these shares and they use these contributions to buy office spaces and list them out. Many of these property groups own the office spaces around Central, where you see your Discoveries and your Sasos and so forth, paying rent of millions by the month. But residential property is always something that people will always look into. And as we expand and we grow our economy, it's something that we are going to need to strengthen. And it's an investment that can never go wrong if you are going into residential property. On the issue of ShopRite and Pick n Pay coming into the township, it's the same issue as when spaza shops were taken over by foreign nationals in the early 2000s, coming into the late 2000s in many communities. It's whether or not communities want to club together and say, how do we want to invest in the food, in the things that we consume from these shops? And if cooperatives like this one say that in every community where we have members, we can invest in spaza shops, ensure that the entire value chain is done properly. We put equipment like cash registers, card accepting mechanisms, and the entire value chain of ensuring that the suppliers are in place, delivery is done on time with all the respective products. Then communities can start competing. People in communities can start saying, no, but Pick n Pay is not us. We can have spaza shops here. We can invest in people of these communities, and we can then employ people of these communities. And it derives better value for the communities because then we can use what we consume to empower us. And it's something that it's not even complicated. Running a spaza shop, creating the value chain of a spaza shop is not a complex thing. It's a matter of saying, how do we put the value chain and the systems in place and then get the buy-in of our communities and invest in them? Because now the communities must also believe in these spaza shops as part of them. And then we are able to conquer that market back from whoever we believe has taken it from us. Lastly, in terms of valuable assets or industries that we have to look into, definitely things like agriculture are things that will not grow old. For as long as humans exist, we know for a fact that humans will always have to consume food. Humans will always need food on a daily basis, and that's what informs investments in those areas. Things like fast-moving consumer goods, which are your products like toiletries, products that you consume from the spaza shops, which are your packaged products and so forth. Those are also things that you know we will not go wrong in. Another sector that we think is going to make a huge boom is the technology sector, because in the so-called fourth industrial revolution, a lot of technologies that are going to automate how we do business, that are going to automate how we live, are industries that are going to see a huge boom and a huge growth in the next 20 to 50 years going into the future. So early investment into these industries will also have a huge return on investment in the coming time. So they are your safe asset investments, which we know people will always need, but there are these gambles that can pay off in the long run. Imagine people who were coming out of the 2008 crisis, who invested in Facebook, who invested in Twitter, and all these companies. They are now billionaires in terms of the stock that they hold. But these were just normal companies that were coming with technology that many could have thought, this thing will die out. But because you took some risks, you have high returns that are being paid on your investment currently. And the investment policy can be to say, you have stable, non-high risk asset investment, and then you have high risk gambling portfolio investment that you have that can pay off large returns when it works, and you can break down your investment strategy in such a way. Thank you.
Tsietsi, do you want to make some comments on the question and the comments that Nwaku made?
Yes, I also got disconnected this side, network challenges, but I'm back now. So when we look at what business does, it always adapts. But now, in any organized market, there's always opportunity to navigate as a collective. So now, when you look at certain business elements that, irrespective of the condition, that won't change, one could be the food sector or the food industry. One way or another, we have to eat. So those like one of your sustainable businesses, but also what keeps most of big business alive is because of the way they diversify. You look at Bidvest, have over 200 companies under Bidvest supplying different components. So you find them everywhere. So in that way, then you are able to diversify and keep that whole value chain within yourself. But in order to do that, you must have that financial capability to organize yourself. So whichever competition comes in, you look at the Japanese model that they use. I forgot what the term they use. So what they do, they work as a collective. So if competition comes in, they're able to lower the price of the other company at the cheapest way as possible, so that they can survive for the next 2 or 3 years. They know you'll be out of business, but they make those decisions together in how they build their businesses. And every component that they will build, they will make sure that you use the service of the other service provider within that group. So when you have that capital possibility, even now, if you had that financial muscles, you'll be looking at the possible business opportunities that are available, and you are able to adjust and take them as they come, because we can only predict the future, but some questions, you find solutions as you go. So you will always have competition in anything that you do, but how you position yourself and how organized you are, then there's no need to worry about the future in that regards, because you'll be able to adapt and provide these different services going forward. But the ultimate goal is to have that huge saving capital so that you are able to spot opportunities as they come and be in a better position to position yourself should those opportunities arise. Because, for instance, if an opportunity arises now and you don't have the capital, then it becomes a question, could have, should have. But if you do have the capital and it makes business sense, then you are able to take advantage of those opportunities that do come, and they will come as time goes by. So the opportunities are endless. The world is not going to end. It's presenting more opportunities. And now the question is, are you prepared to take those opportunities? So we need to prepare for rainy days. So this is the time.
Thank you, Tsietsi. I think the questions that, they're from the answers that you gave and what Yamkela gave, it just talks to what collective actions is capable of doing and what it can bring even for ourselves if we were to mobilize more. I think from global change investors, That has always been our intention from as far as 2017 when we started in August. And the issue of a cooperative banking initiative when it came in 2018 during our first year AGM, it was to consolidate access to finance, not only for GCI, but also for the individual members, for their personal and their business activities. And I think that from the model and the numbers that you have presented, you have shown it is possible to mobilize cash or to mobilize finances if we bring our head together. We are moving towards this global change investors, but even the areas that Yamke raised, the agricultural aspect, we have already bought a land now as we speak, where we will be establishing one of our cooperative enterprise. We should be able to report in the second quarter how far we have gone. And that's just an indication of the extent to which collective action can bring in establishing those tangible assets that in the long term become assets that the generation to come can depend on. As I am raising this hand, there is a hand that has been raised. Yes, Tendo, I think you can be able, I see your hand is raised. You can be able to come through. Is there any other hand that has been raised so that we can recognize them one after the other and see what is the extent of the time that we need to play? Yes, you can go ahead and raise your question.
Good afternoon, everybody. I just wanted to ask, currently at GCI, how many members exist and how many members are you looking to get? How much contribution will an individual be giving? That's the second question. The third question, are there any current projects? You've just mentioned this one of agriculture. Besides the agricultural one, is there anything else? Or is there special interest that GCI is looking into, or you'll find yourself in every industry, in everything? Those are the 4 questions that I have. Thank you.
Any other hand before we can answer that one on behalf of GCI? Is there anyone with a hand raised? As you are thinking through of what is it that you need to be asking, I think GCI has identified 4 areas where we intend investing our contribution or the investment amount. We have identified agriculture as one. Number 2, it's property. Number 3, it's manufacturing. Number 4, it's financial services. And the financial services, this is where the cooperative banking initiative that we are currently driving falls in. But we also have those other 3 elements that we identify, and that's the reason when we bought land for its strategic position. It enables us to pursue agriculture, and it also offers an opportunity to do other things that that area provides as part of income generating. The cooperative bank space, we are currently approaching 100, between 80 and 100. And you'll know that for registration purposes of a cooperative bank or cooperative financial institution, we require 200 members that will have paid their joining fee and their buying of mandatory shares, which are 10 shares. You buy those 10 shares for 500 Rand, which means each share it's about 50 Rand. For joining the cooperative banking initiative, you pay 250 Rand, and it's only 750 for you to become part of the cooperative banking initiative. And our model then says to us, once you have joined the cooperative banking, because we need to show confidence in our collective actions, the contribution of 250 on a monthly basis continue. And that money goes into the intergenerational wealth fund. That is where the money that collectively all of us, when we contribute, even before the registration, that money then goes into investing into these assets, like the enterprise that will be launching before the end of June in our agricultural space. That's how we are running this. We are in the process of launching another one in the financial services outside of the cooperative banking initiative, because that one it's a fixed space that requires 100,000 of share capital out of 200 members. That is as far as I think one can be able to reply to that question that Tendo raised. We need more people to come and join the cooperative bank. We need more people to can come and also join GCI, because the investment opportunity are huge. I think when Yamkela said, as people do telecommuting in these buildings, what's going to happen to them? If we have financial muscles as a cooperative bank or as GCI collectively, this is then an opportunity where you buy some of those buildings and we can then start using them as our manufacturing hub. Because unless we find them at their cheapest end, there will always come a time where the property market will boom again. Thank you. Is there any other question that someone wants to have or someone wants to raise to enable us before we close this conversation? It's important that people ask questions, because that's what enhances our ability to do the right thing. Is there any other hand that someone wants to raise? I know my guest speakers, our guest speakers, they can also make some comments beyond what GCI is able to do in terms of what that question Tendo had raised. If Yamke and TAT have any input in that regard, even if it's not directly about GCI, but under general in terms of what COVID-19 economic landscape is presenting to us, I think you can go ahead and do that. Thank you.
I see, Alando, there's a question that has come in from the chat. Galaxy A50. Please address that, then we can have the closing comment so that we don't leave it behind.
Yeah, we will attend to this one. I think it's not supposed to be part of the conversation, this one. We can attend to it outside of the, what is it? Outside of this, we'll check who Galaxy A50 is and then attend to it. You can go ahead and Yamke and then attend to the question that Tendo raised, or if Tsietsi wants to make input on that one, we can do that.
Okay, so I do understand the share structure as well. It works like that. I'm just going to make closing comments and say that this is a great initiative, and it's a grouping that where communities can start clubbing together. And this is the idea of a cooperative bank is not an end in itself, because members can also decide to say, we've raised 10 million. We can now get a mutual banking license. They still remain a cooperative financial institution, but then they create an entity like a mutual bank. If you will remember, before 2017 came and there was corruption around VBS. It was a black mutual bank that had existed from 1982, and the financial muscle that it could put into the black community was huge in terms of what it did in Limpopo. before it came to Johannesburg and whatnot, but how it was able to mitigate the financial needs or the financial services needs of people in the jurisdiction where it was servicing. It was a impactful organization. And now you can realize there's another mutual bank that is white owned called Finbond. If you research that mutual bank and where it is and the financial services that it does, it's a mutual bank that you will find in almost every small town as well, including big, but in every small town, when you go nearby the taxi rank, you're likely to find Finbond somewhere. They do loans, they do all sorts of financial services, but they're a mutual bank. They're one of the two surviving mutual banks. The other one is in Grahamstown. It's an old mutual bank. But what I'm trying to say is that you might think it's a small initiative now, but it's got the potential to grow and change the economy in a very impactful way and change how we imagine financial services as people. Because right now we have a very monolithic corporatized financial services industry, but it doesn't have to be that way. When you go to countries like Bangladesh, where you can study what they call the Grameen Bank, that was started by Dr. Yunus. It's something that helped communities in Bangladesh address their financial needs, and they raised millions of dollars from small monies in the community, and were able to then change the life of these community members by addressing their financial needs. If you go to countries like India and research how they do insurance, it's very different from how we pay a premium to Sanlam or to a funeral policy cover like Martins or Avbob or whatnot. They do it completely different how they do insurance, even for their property, for their crops and whatnot. They have concept of micro insurance where they insure each other, but the premiums benefit the members. Right now, if you pay 500 Rand to Sanlam, and all of us are paying 500 Rand to Sanlam on a life cover, Sanlam takes most of this money and invests it in interest accruing accounts and interest accruing assets, and they get the majority of the money. That's why they are valued as a big company. They have money. I mean, the shareholders of Sanlam are the ones that are going to make the money. In case you pass away or you get into an accident or whatever you cover yourself in, you get that payout. But what happens, you've been paying for 20 years, you've been paying 500 Rand, and you get a payout of 20,000. And you realize that you've long paid over that 20,000 in your 500 Rand contributions, but you don't get any value of this asset that you are giving to Sanlam in the form of your contributions. But in this CFI that you are part of, if you created a similar policy, you would begin to see investment returns to you coming back as the institution grows and that money is invested in different assets. You will still get a payout if you pass on, but you will still get much more through the assets that are invested. So I encourage everyone to study what cooperative financial institutions are, what cooperative banks are, and also study the Grameen Bank, study what mutual banks are, and understand how the financial system of South Africa works, and understand that it is due for disruption. We can disrupt it if we really want. Like Tietty inferred to earlier, that the current stokvel market collects or has a value per annum of about 65 billion to 70 billion. That's about 7% of the annual tax collection of SARS. It's sitting in the stokvel market. SARS collects about 1 trillion Rand per annum. And that is what our fiscus is. That's what the money that is used for powering the departments, the provinces, whatever assets that government gets money from. Is used by it comes from that collection, that revenue collection. Now 70 billion is 7% of that. That means now that the government has a deficit money, stokvels, if they came together, they could lend our government money ESCOM is getting 23 billion from government every year for the next 3 financial years. That means it's getting 70 billion over the next 3 years from the government as commitment to helping it survive. Now imagine the government has now to go to World Bank, to IMF to lend this money. Imagine if all the Stokvels came together and said, no, we'll lend the government 23 billion per year. And then they will pay us at the interest rate that they are paying all these institutions. The government would be indebted to its own people, and we in turn would make returns. It's just that we have not monetized that buying power that Stokvels have collectively, because each of these Stokvels, they gather this 70 billion rand, and then they return it back at the end of the year to wherever they do the purchases. But if they used it effectively, they'd be able to make meaningful and impactful, long-lasting interventions in the economy and change the lives of the communities of South Africa forever. And this is the kind of thinking of business models to our money and our initiatives that we need to start bringing in. And it will change our lives for the long term, and not only our lives, but lives of the generations that are yet to come and are still coming. They will reap the seeds that we are sowing today. Thank you so much.
Tieti, do you have, there was a hand raised by Maria. I'm not sure if she is still ready to ask that question. We will accommodate her, and then possibly Tieti then also round up a conversation in his input once Maria has brought a question in. Maria, is the hand still up so that we can then give you an opportunity? I think we should be able to, or Maria is covered. Tieti, I think you can come on board and let's get the ball rolling. We should be able to close in the next 5 minutes or so this conversation.
No, thank you very much for the opportunity. I mean, everything that is happening, we've talked about, is already happening, is already in existence, is already in motion. Someone is doing it somewhere. So my parting shot is that we can no longer outsource our responsibility of being for our own financial freedom. If we outsource that responsibility, then we will still be having the same challenges in the next coming 30 years. So now it's time we own up and rewrite that story.
Yes.
That's it for me.
Oh, thank you, Tieti. And I think we, from the GCI side, Global Change Investors side, we want to thank everyone who has come on board. There was an opportunity for people to sign the attendance register for this session. If you sign it and you want a recording, we have recorded, we have the audio record for this session. And those of you that have got access to Facebook who are streaming live this conversation, it's available in our Facebook page, Global Change Investors GCI. You can also find it there. And if you came a little bit late, you can check what we have in that space. And then you can just follow through what we are doing. We hope to host more conversations about cooperative enterprise, particularly because I think the economic landscape in our country is providing, disruptive opportunities that cooperative enterprises, if they were to come together, or those in the cooperative movement were to mobilize their financial resources, it will make so much of a difference. I think both the model that Tieti presented and what Yamkela presented in terms of how Afrikaners managed to mobilize resources to the extent that they did. He may not have mentioned the companies that government, the Afrikaners then established, but you read that and you'll be able to say, yes, we have seen it, and this is what is happening. And that's the reason I think as Global Change Investors, yes, we want to create a space where even if people are not part of GCI, but would love you to be part of GCI. If you are not part of GCI, be part of the collective action movement or collective actions organizations that enable us to amass all the resources that we need to have and be able to drive the economy to benefit both our areas where we live in the township, in the rural areas where we come from. Some of us, we have influence in our rural communities, but those communities are looking at us that have moved or migrated to the urban centers to bring ideas on how life can be improved or their livelihood can be improved. And it's on that note that we'll want to end this conversation. Send through your register through that link. If you need more info or the recording of this in an audio format, we'll be able to provide to you, because this is not our only conversation. This is our collective conversation that you also need to benefit. As you engage with other fellow colleagues, tell them that there is a possibility that next week, Thursday, 3 o'clock in the afternoon, we may have another conversation. Just keep watching the space. We'll be able to share the details. We're just finalizing the logistics of the next conversation. If it does not happen next week, we might have it in a fortnight, but it will also be on a Thursday to that effect. Thank you, and let's enjoy the cooperative enterprises, collective action as we build our intergenerational wealth creation. Thank you and goodbye.
All
You
right,
are
thank you,
allowed
Beth.
to say goodbye.
Before you go, Elder, just please
Yes.
assist people who need to sign the register. There are people who need assistance with the register. Just maybe rehash how it's done again.
Or the register, possibly let me just get just before everyone goes, let's do it this way. It should be easy to do the register. Everyone, this is the link for the register.
Maybe put it on the comments, Elder.
Yes, that's what I'm doing. Yes, that is the registration. Oh, sorry. Let me go back. Are you able to see the, what is it? The
form is a Google form. So to everyone, it's a Google form. You'll be able to link to the Google form, type in your name and whatever, and you'll be able to sign the register. Before we go, let me have one final word. I would encourage, if people can find this book called The Super Afrikaners. It's a book about Afrikanerdom, how from 1918, when they formed the Broederbond, they set to change every sector of their society. And from there, companies like Sanlam, Momentum, Santam, Nespas, which owns DSTV, MultiChoice, SuperSport, how those companies were born and what their vision for each of these companies were, and how they then ensure that they aggregate the wealth to be able to change their material conditions as a community and put themselves in a position of power. That book details a lot about how they operated, and you can gain insights into how community wealth can be built by cooperating together and using institutions such as cooperative financial institutions to effect change going forward for ourselves as a community and as a group of people. So it's one of the books, and as we have further sessions, maybe I will keep on recommending reading material that assists in the journey of building generational wealth as per the motto of the financial institution that we are in.
Thank you, Yamkela. It's a very good book. I've read it. It's a very good book. Those that have access to it, check it. We'll see if we find the access to it, whichever way we find it, we'll also be able to share with those that are interested. Thank you and goodbye. Have a good evening for tonight. Thank you.
Good day. Thank you. Bye.
Bye.